Over the past 3 years, the inflation has kicked our butt big time. The consumer's wallet is really tight. They have to make hard choices, but one thing that they do not seem to let go of is either their bag of Doritos, a nice chocolate bar, or a delicious latte. So today we're gonna look at Pepsi versus Hershey versus Starbucks to see which one is the best luxury treat at an affordable price stock company. All right, guys, so we are now on Dividend Stocks Rock because I have built a stock comparison tool which helps me doing additional research very quickly if I'm hesitating between one stock or another. So it's a great opportunity to do that today to show you how the stock comparison tool works and what is the analysis that I make when I think, oh, I'm going to go for this trade idea, but I'm not too sure whether Pepsi, Starbucks, or Hershey is the best company to buy. So you can actually load pre-selection, but today we're going to go directly to the good stuff and select them right up front like this. So Pepsi, Hershey, and Starbucks. The idea to add Starbucks actually came from one of my member at DSR because he wanted to compare Hershey with Starbucks, and another member wanted to compare PepsiCo with Hershey because the thing is, the first one is a consumer staple, the second one is also a consumer staple, but the third one is actually a consumer discretionary. But they do have one thing in common in their business model is they sell something that is relatively expensive for what it is, like $8 for a latte or a chocolate bar or a Doritos or a Pepsi Cola. Those are like now luxury treats that are affordable for people because it's like small ticker, but overall it's still a luxury treat. This is why I wanted to show the comparison between the three companies. So if we go down a little bit more, we'll notice that Pepsi has a beta of like 0.55, then Hershey at 0.35, and then Starbucks pretty much at 1. So that tells us that if you are looking for a business that will not follow the market exactly and will be a little bit less volatile, well then Pepsi or Hershey should be your pick because Starbucks is pretty much following what's happening with the market. Now, after that, we have the pro rating and the dividend safety score. So we can see here we have a 5 rating for Pepsi, which is like exceptional buy. But for the most of it, we could probably argue for a very long time between all the other three companies saying, well, it's a 4, it's a 5. Overall, those three businesses are actually loved at DSR. One of the reasons why it's loved is obviously because of its dividend triangle. So by looking at dividend triangle, and I'm going to just minimize the other section right now, so it's going to be easier to look at. So focusing on the dividend triangle right now, we can see that we have like the 5-year revenue growth, the earnings per share growth, and the dividend growth. So those 5 years are analyzed growth rate. For Pepsi, we're talking about mid-single digit for revenue, mid-single digit for, well, mid to high single digit for the dividend, and then double digit for the earnings over the past 5 years. We have similar numbers for Hershey, which are actually almost identical, so slightly better for Hershey than Pepsi. And then for Starbucks, we do have strong revenue growth, but not so much for the earnings, and then the dividend has been more generous. So that gives us a little bit of context, but what I like to do at this point is to look at the trend because the number is good, but you want to make sure that the revenue growth of 6.34 was not like 2 big years in 2019 and 2020 and then a very slowdown for Pepsi or any other stock. So we're going to look at the stock cards right away. What you see here is the dividend triangle for Pepsi. So as you can see, the revenue trend is actually very steady. So it's like going up, going up, going up. And this is pretty much what I like when I look at a dividend triangle. I want to see consistency, which is a bit harder to find with earnings per share, right? So we had like some great years here and then it goes down and goes up and it goes down and it's now going back up. So a little bit harder to look at what's going to come up next for Pepsi in this case. So for the earnings per share, a little bit, I don't know, like a bit shaky. And then we have the dividend growth, which is quite stable. We see that was a small slowdown here between 2019 and 2020. But after that, it kept going up. So the inflation has not hurt Pepsi Cola that much, and that was pretty much the storyline. This is one of the reasons also that Carrefour at the beginning of 24 said, you know what, Pepsi, we're not selling your products anymore. So there are a few bad news, a lot of noise going on with Pepsi. We can see that it affected the stock price as of late. Another reason why people are not too sure about buying Pepsi right now is what I call the Ozempic scare. So it's a very popular drug to cut down your hunger and help people with obesity to eat less. I don't believe in the Ozempic scare really, because yes, people are going to go on that drug. They're going to try to lose weight, but losing weight is about having good habits. So making a lot of more physical activities and sports and eating less. You cannot solve all your problem with drugs, so I'm not too sure it's the right avenue to take. Another company that has a similar victim for the Ozempic scare is Hershey. So as you can see, the stock price was trading around $275, a little bit less than a year ago. Now going back to like less than 200. So what's going on here? Kind of interesting because the revenues are picking up nicely since 21. So we see a very strong trend here. Same thing with earnings. And this is one thing that I like to see is when both the revenue and the earnings per share are moving accordingly. This tells me that while the company found ways to grow their revenue, they can also maintain their margin because the profit is still increasing. In this case, obviously, the earnings per share right now is not increasing as fast, especially over the last few quarters, than revenue. But overall, pretty solid dividend triangle. And obviously, the dividend growth is very steady. It was a little bit slow here. Now it picked up a little bit more. Again, a lot of pricing power, considering that Hershey has a lot of negotiating power as well because they occupy a lot of shelf in grocery stores and convenience stores, and that give them a lot of like possibilities to increase their prices. People love their brands, and if you're hungry for a Henry, well, this is what you want to buy, right? They have also opening up a whole new market with salty snacks, playing a little bit against Pepsi Cola in this category. So Pepsi is roughly half beverage, half healthy snacks, and then salty snacks, not healthy. And then Hershey is definitely more go towards like candies, chocolate, and now going after salty snacks. In a complete different dividend triangle and business, we have Starbucks. So Starbucks, the stock price is pretty much like not doing that well since 2022. The revenues are going great. Stores are now being open in China at like 500 to 600 new stores per quarter, which is great. They have a lot of people on their membership loyalty program in North America. We're above, I think, 34 million. And we see that the earnings per share, well, that was really down during COVID, which has a good explanation, but now we're back on uptrend. So a little bit shaky, but that was explained by the COVID. And after that, it's going well. For the dividend, it's pretty stable, very generous company. All of them are actually paying a yield around 2.5%. So overall, at this point, I would say Pepsi is probably the one with the weakest dividend triangle. Hershey and Starbucks looks pretty interesting, so we're going to continue to dig into the numbers. Going for the dividend profile now, which is really interesting because now you can see what is the yield. So if you're an income lover, you're going to probably go for Pepsi, and it is slightly more generous than Hershey and Starbucks, which are at roughly 2.5%. The other one is getting close to 3, which is interesting, but it also comes with the highest payout ratio. So payout ratio at 70%, the cash payout ratio is a bit tight at 94, but keep in mind, cash payout ratio is based on free cash flow. That could fluctuate a lot from one quarter to another. So I would just put a small asterisk on this one. It doesn't necessarily tell you that the dividend is at risk. Actually, the latest dividend increase was of 10%. So in this case, I am not convinced that Pepsi is about to slow down its dividend growth rate. Actually, you see The past 3 years at 6, the past 5 years at 7, but the latest is at 10, and the company shows 51 consecutive dividend increases. For Hershey and Starbucks, we're at 14 and 13. They have a similar growth rate here. The last year was a lot more generous for Hershey, but if we look at the 3 years and the 5 years, we're pretty much around the same thing. Similar analysis for the payout ratio. So overall, when I look at the dividend here, if you want to go for stability and you want to go for a little bit more yield, then Pepsi is a little bit better. So far, kind of interesting because we have definitely a fight between Hershey and Starbucks in terms of growth going forward, and we have a little bit more of stability and generous yield for Pepsi. So just looking at the numbers, not exactly telling us which company is the best one. So we're going to take a look now at the valuation. This is usually not a portion that I spend a lot of time of, but when we're getting really tight in the analysis and all the stocks are almost head to head, looking at the valuation could be interesting. The problem I have with valuation is I may have my calculation, you may have your calculation, and if we ask 10 CFAs, professionals with unlimited resources, we're going to have another 10 different number in terms of valuation. So it's really hard to determine, but two things that I like to look at is the forward PE ratio versus the average 5-year, and the same thing with the average 5 years of the yield versus the current yield. So looking at the yield already, 269 versus 289, 208 versus 241, and then 197 versus 245. What it tells me in general is Hershey and Starbucks seems a little bit undervalued, a little bit more than PepsiCo. Why I'm saying that? Well, in general, the company will offer a yield that is pretty much the same year after year, because then the market will calibrate their expectations. So if a company grows their earnings and then it opens the door to more dividend growth, well, technically the stock price will also grow, and historically a business will offer a similar yield as long as there's not a major change either in the environment or in the business model. So everything as equal, a company will offer a similar yield. So when you see a small difference, well, then you can probably deduct that there's some deal going on, or the market is expecting a lot of headwinds. Same thing with the PE ratio. In general, a company will trade about the same multiple times of their earnings. In this case, we have 25 for Pepsi versus 21, the forward PE ratio, the 27 versus let's say 20, and then 51 versus 21. So obviously this one, Starbucks had probably, we saw that the earnings was going down very fast during COVID, so that affected the average. You have to take that into a grain of salt. But definitely the best value play here is probably Hershey at this point. Again, very tight, but still interesting to see what's the difference between one or the other. So now we're going to look at the debt levels, some debt ratio, which I kind of like. The favorite one here before I look at the others that are quite similar here when you look at the current ratio is like 0.80 for all of them. It's the credit score. The credit score here that we have at DSR is provided by Refinitiv Starmine. So Refinitiv is a financial data terminal that is owned by the London Stock Exchange, similar to Bloomberg, and they aggregate 6 to 7 credit ratios, and they put them together versus the rest of the stocks traded in North America. So, and then it gives us a score between 0 to 100. So as you can see, we score at 83, 82, and 72. So pretty solid score. One thing that caught my attention when I was looking at this part of the comparison tool was the debt to equity. So we have like 2.28, 1.25, 45, and then 0 for Starbucks. So I was like, okay, is there a problem with my metrics? Well, the thing is, the Starbucks has a negative shareholder equity right now because the net assets minus the liabilities are actually creating a negative negative shareholder equity. Why is that? Well, when you dig into the balance sheet, you realize that there is a huge portion of leases that are committed. So they see that as a long-term debt. And obviously, because of that, that has a major weight on Starbucks balance sheet. So that's why we do not have the debt level. So overall here, nothing to scream about, pretty much standard in the industry. Again, very difficult to see if there's any key point to select one. So we're going to move on to the performance now, and then return on invested capital at 17, 26, 26, so a little bit better for Hershey and Starbucks. The 5-year total return gives you kind of like an idea of like what happened in the past, but it will not tell you what's going to happen in the future. So overall, after looking at those 3 companies, what I can tell you after this comparison tool analysis is, now I've just looked at the numbers, I will then need to look at the narrative. So going back to stock cards, for example, and then reading the investment thesis, looking at what are the growth vectors are, and then going down to the potential risk because they're super important as well. So this is the type of analysis that I will do at a second stage. At this current stage though, when I look at the company's metrics between all of them, I would say that Hershey and Starbucks are probably a little bit better than PepsiCo in terms of numbers. I think that on the other side, Pepsi is suffering from a lot of noise right now because of Carrefour, because of the weight loss drugs as well. So the narrative is more negative around Pepsi. This is why we have a rating of 5 at DSR, because we think there is a better opportunity there in terms of like what just happened recently. But overall, what is great here is we have 3 great companies. So Pepsi, Hershey, and Starbucks would definitely fit within my portfolio. Full disclaimer, I do have shares of Starbucks. I do not have shares of Pepsi or of Hershey, but I like the 3 of them. Now, are you more comfortable buying a company that is opening restaurants and focusing on coffee? Do you prefer a company that focuses on candies and a little bit of salty snacks, or a company that is roughly half beverages and half salty snacks? That could also help you make the difference. In other words, I don't think you could go wrong that much. Based on my analysis, I look at those 3 stocks and I'm thinking, well, I would be comfortable with them. They do have downsides, each of them. Starbucks, high exposure to China, lower traffic in shopping malls in North America could be also a growth problem. Growth in general, North America could be definitely a problem. With Hershey, we have inflation that is hurting cost of raw material, especially for chocolate. Also, again, the coming of like people trying to healthier, lose weighting with Ozempic and stuff like that. So that could hurt Hershey and also PepsiCo. And then PepsiCo's all over the news with Carrefour. So again, if like at this point, it's not a big problem, but if it becomes a trend where more grocery stores across the world do that and try that as a heavy negotiating power, well, then it could go wrong. So as you can see, 3 of them looks interesting, has a good profile, but do have some potential risk. So it's always important to wait which kind of risk you want to bet in your portfolio and you want to live with, because no company is perfect. All right, guys, I hope that you have enjoyed this video. Give me a thumbs up. Tell me in the comment which one you prefer between Pepsi, Hershey, and Starbucks, and we're going to talk about that in the comments. And until the next video, which will be next Thursday, don't forget to stay invested.